Hello guys, all right. Let's proceed with our topic, I-16, property, plant, and equipment. This one, actually today we are just going to take a look at measurement, and then we go to a worked example for initial measurement, and then we proceed with subsequent measurement. So we took a look at introduction in the previous video. You can go to the YouTube channel to check for it, scope, definitions, and lastly we took a look at recognition criteria. And today we are here on the measurement part. How do we measure the PPE? So actually, why measurement? You know, when recognizing an asset, you have to know its value so that you write it, let's say PPE, $60 million. How do you obtain that $60 million? If you cannot obtain that, you won't have to recognize an asset because you won't know its value. So we have initial measurement at the first point of recognizing an asset as PPE. How do we do that? But also subsequent measurement. So you'll find that we have initial measurement as well as subsequent measurement here. No, as well as subsequent measurement. This will be explained right here, subsequent measurement. But for today, we are just going to take a look at initial measurement. Just start with this one is sufficient. So let's take a look now. So once an item of property, plant, and equipment qualifies for recognition as an asset, it will initially be measured at cost. This is the main point. A lot of explanation, but this is the main point. Here's where we come. You have to recognize it at cost. Or sometimes we call it deemed cost, usually fair value. You know what? You know why? You know, there are several ways of acquiring an asset. You may acquire an asset through exchange. You give a machine, you obtain something else. And so the asset that you have received, actually you won't have incurred a cost. You have exchanged something. So if fair values can be used, you have to use the fair value of the asset given up and consider to be the cost. That's why you say deemed cost. So we go to the components of cost. Let's say you actually incurred a cost. You paid something. You incurred cost to have your asset. You did not exchange the asset. You incurred the real cost. How would we classify this? How would we go about this? So the components of cost would be as follows. First of all, you purchase something. So first of all, we have purchase price, less trade discounts or rebates. This is the first point. You go to the shop, the list price is, let's say, $30 million. But you are told that if you buy a lot of products, you'll have a discount of 20%. So if you less it from $30 million, you remain with $24 million. That's why, since that amount of $6 million will not have been paid, you take the purchase price less any trade discount or rebate. Something which you don't pay, something from which funds or expenditure is not incurred by you cannot be actually taken to the measurement of the value of the asset. But also we have this one, import duties and non-refundable taxes. You know, let's say import duties, let's say you have purchased something from outside the country, you have imported. If you import something, usually the country charges some duties so as to discourage. Actually, there are a lot of reasons. Most of the times it's just to discourage people from buying from outside, but these import duties are usually non-refundable. You pay and you won't be given it back. So if you have import duties, there are expenditures that you have incurred to obtain your asset, and so they have to be capitalized to the asset. But also if you have any other non-refundable purchase taxes, you have to add it here. Number 3, direct attributable costs of bringing the asset in working condition, which is location and condition for the use intended. This is the other point, direct attributable costs. Now, what of this? What are we speaking about now? Hey, listen, you have your PPE. You want to install a PPE, let's say. First of all, you do not have it, so you have to know the place at which you will install it. So we say the cost of site preparation. If you prepare your site, you know, or you already know that this is my site, you prepare that site for that use. Just preparation of the site, let's say the site was rough, you cleared the land, and the site was ready for installation. This is the cost of site preparation. But also you say initial delivery and handling costs. Initial delivery and rendering cost. Let's say you took a machine, you bought a machine and you took it from the ferry, let's say, to your place of installation. That's the delivery cost and handling. So that cost is also capitalized. But also you are told installation cost, the actual cost of installing that, let's say you have a plant, you have to install it somewhere. You have to take actually you have to take the drilling machines, you drill somewhere, you take the roll bolts, you plug them there down, and then you use usual, let's say use your spanners actually to lock your plant. These are installation costs, but also say testing, that's net of any proceeds on the sale of the items produced. This is testing. Let's say you have just completed installing something. You believe that it is ready for use, but actually you haven't tested it. So you test it. After testing, actually you will earn something. You will incur some cost, but also you will earn some money. So when saying testing, that cost incurred during testing will also come with some revenue, because the goods generated, even if of poor quality, will probably have some sales value. So if they have, you less that sales value from your cost. So this is what we call testing. And then you can have further costs like professional fees. Let's say when installing or when in need of just installing, a professional came to give you an advice on what to do, or maybe to make sure that your plant is well installed, you have to pay them. And lastly, which is the fourth, initial estimate of unavoidable cost of dismantling and removing the asset. So cost of removing, dismantling and removing the asset and restoring the site on which it is located. You know, let's say you have built a telecommunication tower somewhere. By building that tower, you can have entered an agreement that after 50 years, you will have to dismantle that tower, remove everything, and restore that land to its maybe to how it was in the first place. So this cost, will actually be paid at the end of that life. And so this initial estimate is usually taken as a present value. We usually take the cost in the future and then use the time value of money concept and discount it to the present. Actually, we'll see this in an example too. Let's finish up here before proceeding and going through an example. So here we are told, the following costs will not form part of the cost of property, plant, and equipment unless they can be attributed directly to the asset's acquisition or bringing it to its working condition. So generally, these costs, they are not capitalized. They are just expensed to the statement of profit or loss. First, administration and other general overhead costs. Actually, these costs, since they are normally not attributable to bring the asset to its working condition, they are just ignored. Also, startup and similar pre-production costs. These two are not considered. Startup costs and also similar pre-production costs will not be incurred. Let's say you had to bring some workers to help you, maybe to start production. Those costs actually are not part of the asset, because the asset was ready for use, but you have just not started the production. But once the asset is ready for use, you cannot capitalize any more costs, unless it's something very, 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 very critical. But right now we're just speaking of initial measurement. Also, initial operating losses before the asset reaches planned performance. Let's say at the beginning, the company is facing losses. You cannot capitalize those initial operating losses before the asset reaches its planned performance. Just after testing, you cannot recognize further costs, even if you incur losses. And then here we are told, in addition, costs of site selection and evaluation are not capitalized. Be very, very careful here. When selecting and evaluating a site, that means you are not ready. You capitalize costs that you have already decided that I'll build my asset here. I'll use my asset over here. So when dealing with site selection, it's just like you are just incurring costs to look on whether to use the site or not. And then when evaluating it, you're just doing the same. That's why here in the cost of capitalization, we said we use cost of site preparation. So See the difference? That is site preparation, but these are cost of site selection. By saying site preparation, it means that you have already decided your site of use, just like that. All right, let's finish up here. So all of these costs to be recognized as an expense rather than an asset. As I told you, you expense them in the statement of profit or loss, but we are given further information. In the case of self-constructed assets, let's say you didn't purchase, like you say, you didn't purchase an asset, you had to construct it by your own. You actually incur material costs, labor costs, things like that. So the same principles are applied for acquired assets. But if the entity makes similar assets during the normal course of the business for sale externally, then the cost of the asset will be the cost of its production. I think this is very, very clear. You are making assets during the normal course of the business for sale externally. You just make them to sell them directly. But also we're told here, this also means that abnormal costs like wasted material, labor, or other resources are excluded from the cost of the asset. Let's say you have wasted material. Instead of using 80 kilograms of something, use the 100,000. That 20,000, that 20, let's say instead of using 80,000 kilograms, use the 100,000. That 20,000 won't be counted. It won't be counted because it's just an abnormal cost. So it cannot form part of the cost of that asset. Now let's go to an example. Let's go and see an example and then we stop for today. We just go bit by bit. Take a look at this question here. We are told an entity started construction on a building for its own use on 1st April 2027 and incurred the following costs. So these are the costs that we incurred, and we are given here that the following information is also relevant. We have been given the information, and lastly, we are told that you are required to calculate the cost of the building that will initially be included in the tangible and current asset additions. So we just need to know what the initial cost is. That's what we are trying to look at. So, you know, when given question like this, you have further information here and details here. So you can start anywhere you want, but also you could be starting with material with figures here. You start, for example, this is material costs, and then you go to the top and look for materials so as to know whether you're right or not. That's also an option, but you could also start from the top here and look if there is further information about this figure. For example, let's start from the top. If you start from the top, you have purchase price of land. We already said purchase price is capitalized, but we reduce trade discounts, but we have not been given discounts here. Looking at these notes here, there is nothing giving information about the purchase price of land. So you just capitalize that to 40,000. Sorry, to 40,000. So you capitalize it all here. And then you proceed. We have stamp duty. You know, this is the stamp duty and it is usually non-refundable, so you have to capitalize it. Going down, you have legal fees. This is a professional cost. We said that professional fees are capitalized. And down here, site preparation and the clearance. By preparing the site and clearing it, it means that you have already chosen the site. So it's also capitalized. So stamp duty, legal fees, and site preparation, I said all, you capitalize them all just like this. Then we go further. As I told you, you have to check the down here if there is further information on that. But here it's just about labor, here dismantling, and there the building, completion of the building. So nothing more. Going to materials now, which have been for which the information has been given down here. Materials look to be 100,000, but what are we going to record this 100,000 or no, or what? Read further information here. Material costs were greater than anticipated. Why? Were there abnormal materials which are not recapitalized or what? We proceed reading. On investigation, it was found that materials costing $10 million, 10 million TZS, had been spoiled and therefore wasted, and further 15 million was incurred on materials as a result of faulty design work. You immediately recognize that these costs should not be capitalized because actually they do not form part of your asset. So you have to take 100,000 and then reduce these figures here. You have to remember that our figures here were in thousand, to the decimal thousand, so you have to eliminate 3 zeros here. So here 10 million becomes 10,000 and 15 million becomes 15,000. So you come here and subtract 100,000 minus 10 minus 15, and we end up with 75, just like this. Then you proceed further. Proceeding further, we are told labor period 1st April 2027 to 1st July 2028, which amounted to 150,000, right? So if you have something like that, just go to further information on labor and see if there are costs to expense instead of capitalizing. You're told here, as a result of these problems, work on the building ceased for a fortnight during October 27, and it is estimated that approximately 9 million of the labor costs relate to this period. So this during October, the job was suspended. So the labor was still paid, but the job was suspended, meaning that the expenditure incurred on labor should not be capitalized, should not form part of that asset, and that they should be expensed directly. So you have to eliminate them from this total fee of 150,000. So that's what we're gonna do. All right. So you proceed here. We have labor. You take 150,000 minus 9,000 and you end up with 141,000. Just like this, and everything becomes okay. So we proceed with our job here. We are told architect's fees. Architect's fee, this is a professional fee. So you obviously include it. General overheads. General overheads, as we said, general overheads are not part of the assets capitalization, so we just expense it. So we have architect's fees of 20,000 here. Architect fees 20,000. As for general overheads, will not capitalize, so we'll put it dash. The dash meaning that we'll have to expense it to the statement of profit or loss. Then we have general overheads. I think we've talked about this already. And lastly, we finish up with dismantling costs in 30 years time, which is 20,000. You know, dismantling costs have been given in 30 years time, but we need to know the initial cost now. So this is the future value. So you have to discount it to the present value. Usually you are given the discount rate in an exam. So if you're given it, just use it directly. As here we are given information that dismantling costs will be incurred in 30 years time, and the cost of capital is 10%. So since we are given the cost of capital is 10%, it's just very easy. All you need to know is to compute the present value. All right, I think you all know how to compute the present value, and for those who do not, I would like to show it to them. Present value is just given as future value over 1 plus R, which is the discount rate, power n. What is my power? Power n, just like this. So you'll have an equal sign. You'll have the future value, which is 20,000. You divide by, you open brackets, 1 plus, right, is 10%, which is 0.1. You close the brackets and you say power n, which is 30, just like this, and you have your present value. All right, so you have to discount the amount, just like this one here, you know, dismantling cost 20,000 over 1 plus 0.1 power 30, arriving at 1,146. You can see how the value has diminished from 20,000 to 1,1146. So just sum your figures here and obtain the initial cost of the asset, which is 512,146, just like this. So as we said, the ignored cost will be taken directly to the statement of profit or loss as expenses for the period. So we'll just expense them. But also you have to read all explanations. You know, as you remember, we did with this note here already, but there is a note we didn't consider. We said the building was completed on 1st July 2028 and occupied on 1st September. The building was completed on 1st July. Of course, this was within the date of, for example, this labor year, 1st July. In case maybe the building was completed on 1st July, but labor was paid up to, let's say, 1st September. this further labor payment would not have been capitalized too. So it's just something like that which we need to understand. All right, so you also have to know the subsequent treatment of this dismantling costs, which we have discounted. But this is part of a provision. Usually we do debit, we debit the PPE and then we credit the provision and then we account for the provision subsequently. It's just simple. Actually, we'll come and see such an example. But for now, since we're just dealing with initial measurement, I think this is fine and it does well. So thank you very much for everything, for being with me. Actually, if you haven't subscribed, I beg you, I hate you to subscribe, my man. You subscribe and then you let others know of this channel and of our free services. Thank you very much and I wish you a good time.